Doing good. Except for Bitcoin is not doing so great. So let's get into it. Over the weekend, Bitcoin had another bleeding out, dropping as low as $68,000. It has recovered to some extent this morning here in Asia. So with investors seemingly having chosen gold as the geopolitical hedge trade. And then on top of that, you've got quantum FUD on Bitcoin working its way through TradFi, plus lingering questions about the 4-year cycle, whether that's still in play. Bitcoin does continue to bleed. So just focusing a little bit on the quantum FUD thing, I think the biggest part of this is that whether it's true or not, whether quantum computing is actually a threat to Bitcoin, whether that's true or not, the reality is that some market participants think it is a risk. Specifically, the one that's been going around here over the last week is Christopher Wood, who is the global head of equity strategy at Jefferies, a large investment platform or house. I'm not sure exactly what it is, but they manage a lot of money. And he said that they dropped their 10% Bitcoin allocation from their influential fear and greed model portfolio, pointing to accelerating quantum computing risks that could threaten Bitcoin's cryptography and erode its long-term appeal as a store of value. So he has redirected that capital into physical gold at 5% and gold mining equities at the other 5%. So that's one thing that's draining Bitcoin, causing it to continue to bleed. Beyond that, we have sort of a shifting of the Bitcoin holder base. Basically, the new whales in the Bitcoin realm are primarily institutions. They, surprise, surprise, are not ideologues like the original cohort of Bitcoin whales. They're finance people. So unlike the old guard, they don't think about it, Bitcoin, as ideologically. But beyond that, they also just have a higher cost basis. So like older Bitcoiners, the cost basis may be around $40,000 on average. This new investment grade whale cohort, it's closer to $100,000. And so the recent price action has them panicking. Besides that, David, there's a few other things going on here, but all of this is pointing towards, Bitcoin not really catching a bid here. A lot of panic actually amongst the Bitcoin community.
Yeah. All right. So I guess we should get to what I think is probably the main cause, at least the main direct cause in the short term, the financial moves in Japan with respect to government bonds. The yen experienced its biggest one-day surge in nearly 6 months. If you look at the chart, it's pretty impressive actually to see it go from 158, close to 159, all the way down to 155-ish. Now, before we get into what directly caused this move, let's step back to the beginning of last week, and people will probably already know this, but there was a sharp sell-off in Japanese government bonds because of the 6 sigma bond yield increase that was happening in Japan. This spilled over to the rest of the world. Japan's bond market is financially significant to the globe. So U.S. Treasury yields spiked, and pretty much every other bond market, I think, spiked. Equities sold off, Bitcoin sold off, gold went up, as expected. This move was addressed by Treasury Secretary Bessent, who said very explicitly, I'm on the phone with my counterparts in Japan, and I think they should address this. And so the part of this addressment came on last Friday. And this is kind of the direct cause for the yen strengthening and probably Bitcoin having a precipitous drop. Okay, so what happened last Friday? In response to all this turmoil in Japan, the Federal Reserve Bank of New York conducted a rate check on the US dollar Japanese yen exchange rate. And this kind of sparked fears that the BOJ and the Fed were preparing for a possible yen intervention.